Right now, Advanced Micro Devices stock ticker AMD is up 144.65% since January 2023. It's currently trading close to its 52-week high at $185 per share, which is also its all-time high. So is now the right time to buy AMD before the stock continues to climb in 2024? In this video, we will answer this question by analyzing AMD stock, reviewing important financial metrics favored by Warren Buffett, and comparing the stock's performance against competitors. By the end of the video, we will run the numbers through 3 valuation models, deciding on an acceptable fair value price, and I'll also share with you my rating and what I've been doing with AMD in my own portfolio. Before our analysis, I want to welcome you to Global Value and share a friendly disclaimer. Please remember that this is not financial or investment advice, and that you should do your own due diligence and make decisions based on your own circumstances. Now let's get right into it. At the time of this video, AMD is a mega cap stock with a market cap of $286 billion. It also has a staggering 1,400 PE ratio that we'll explain later, and AMD doesn't pay dividends. Advanced Micro Devices designs a variety of digital semiconductors for markets such as PCs, gaming consoles, data centers, industrial and automotive applications, among others. AMD's traditional strength was in CPUs and GPUs used in PCs and data centers. Additionally, the firm supplies the chips found in the prominent game consoles, such as the Sony PlayStation and the Microsoft Xbox. In 2022, the firm acquired FPGA leader Xilinx to diversify its business and augment its opportunities in key end markets such as the data center and automotive. Looking at AMD's performance in the last 5 years, we can see that the stock has significantly beat the market. AMD's stock price is up 623% since January of 2019, compared to the S&P 500, which is up 80.5% over the same time. Now, when comparing AMD against its competitors, NVIDIA, Intel, Qualcomm, and Broadcom, we'll notice that most of the industry has been outperforming. In fact, we can see that AMD actually had the second best performance out of the bunch. This comes in behind the market-leading performance of NVIDIA, which is up nearly 1,600% since January of 2019. AMD's performance is nearly double that of Broadcom, which is up 351%, and Qualcomm, which is up 204%. These 4 have beat the S&P over this time. The big name that's lagged the market is Intel, which is actually down 11%. What once was the market leader in semiconductors is now lagging the industry by a lot. Now let's move on to AMD's financial numbers and take a checklist approach inspired by Warren Buffett himself. Up first, we want their average returns on capital to be above 14%. AMD's returns have swung by quite a lot in this time. They were pretty steady through 2018 to 2022, then they had this big jump in their fiscal 2021. Following that, they had very low returns, swinging to just 2% in 2022, and negative returns in their last 12 months in 2023. This is because semiconductor companies are cyclical. Their margins can significantly swing based on price and demand in the semiconductor market. Plus, certain export controls haven't helped the business either. Still, when these are averaged out, AMD earns 20.8% returns on capital. That's a check on metric number 1. Next, we want growth to get the most out of these high returns. Starting by their revenues, AMD has grown these a ton. This fast-growing stock has increased their revenues from $6.5 billion in 2018 to more than $22 billion in their last 12 months alone. These are up 3.5 times. That's huge. Their earnings are their next component of growth, and these have been all over the board. AMD wasn't bringing in a lot of net income in 2018 or 2019, but that really changed in 2020 and in 2021. Since then, this has been on the decline, however. The company brought in just $208 million in their last 12 months in 2023. To explain that, it's because the company's operating expenses have grown faster than their gross profits. This means their operating margins are down over this time. In fact, they were negative in 2023. That's because AMD has significantly increased their R&D expenses, which may be good for their future, but they also amortized goodwill and intangible assets to the tune of $3.5 billion in 2022 alone and $3.2 billion in their last 12 months. Free cash flow, which is cash from operations minus capital expenditures, is their last and most important component of growth. AMD has done a much better job managing their free cash flows, which is ultimately more important than they have their earnings. They had negative free cash flows in 2018, and they've grown these by quite a bit over this time. These really spiked at more than $3 billion in 2020 and 2021, but they're down in their last 12 months. Still, they're bringing in $1.3 billion in that time. Overall, the company's revenues and free cash flows were up, but their earnings were down. Given this cyclical business, it was important we saw growth in all of these over this time. Because of that, it's an X on metric number 2. Next, we want to look at AMD from the view of an individual shareholder. That's why in metric number 3, we want their earnings per share, excluding extra items, to be growing. We've learned in this time that their net incomes, aka their earnings, are down by 39%. This is also the case when it comes to looking at their earnings per share. Not only are the company's earnings down, their weighted average diluted shares outstanding are up. These have grown by 53%, especially growing in the last few years. What's responsible for that, you might ask? It's that Xilinx acquisition. While it was first announced in October of 2020, the acquisition was completed in February of 2022 with an acquisition price of around $50 billion. So that's a lot of stock issued for the business. Given the prices AMD has traded at, maybe it wasn't as high as it looks. Still, their earnings per share have declined going into their last 12 months in 2023. It's an X on metric number 3. Then in our fourth metric, we want to see something similar but even more important. Here we're looking for free cash flow per share. We're not going to have the same problems as their earnings, as their free cash flows have gone from being negative to positive, and even though they're declining from their peaks in 2020 and 2021, these are still well above where they were pre-pandemic. AMD brought in 82 cents of free cash flow for each share they had outstanding, even given this dilution for Xilinx. It's a check on metric number 4. So far, we're split evenly. We have 2 checks and 2 X's. It's important not to take any of these metrics in isolation, and we'll only put them together and draw conclusions at the end of the video. Now let's look at how the company manages its debt. We want their net debt, which is total debt minus cash and short-term investments, to be below the sum of their free cash flows. As AMD has brought in free cash flow over this time, they've mostly kept it as cash or short-term investments on their balance sheet. This is because the company doesn't pay dividends and they haven't been buying back shares. So as their cash pile has gone up, their net debt has gone down. That's potentially great to see. Today, AMD sits on a $2.9 billion cash cushion. That's around the same level they had in 2022, but it's way up from where they started in 2018. By the same token, as we've seen, AMD's brought in a ton of free cash flow over this time. They're positive in each of their last 5 years. This is a huge check with this cash flow generation and this cash cushion on their balance sheet. Now, how much is AMD potentially worth? Jumping into the first of our valuation estimates, we'll be reviewing 3 unique models to get to our fair value price. If you're enjoying the content so far, please smash the like button and subscribe to the channel to ensure you're notified when we release similar videos in the future. Now, this is our last metric and our first estimate. We want an average of AMD's free cash flows to give us an attractive yield to their enterprise value. Today, AMD has a $283 billion enterprise value, which is what we get when we add their market cap and their net debt together. So it helps us look at the company more like it's a private business. In the last few years, AMD's really done better than any other point in its history. That could be a high point, but it might be the only thing even potentially justifying this valuation. AMD brought in $7.3 billion in their last 3 years, which means in an average year they bring in $2.5 billion over this time. When that's divided by their enterprise value, it gives us under a 1% free cash flow yield. Historically, the S&P 500 has traded around 5%, which is what we're looking for. Currently, in their last 12 months, AMD brought in $1.3 billion of free cash flow. That's even less attractive than average, with only a 0.5% current free cash flow yield. Both of these are well below the yield we're looking for. It's an X on metric number 6. But what about our next 2 estimates? Next, we want to grow their free cash flows into the future using a DCF valuation. This will take historical growth assumptions and an average of their free cash flows to help us figure it out. Plus, we'll add in their tangible book value to estimate their net worth. AMD's been a huge growth stock in the last handful of years after transforming their legacy business. So with that, we're going to have some pretty lofty growth assumptions. If we assume they grow at 20% in each of the next 10 years, then in a terminal stage, we'll estimate this growth is cut in half and they only grow at 10% a year, which is still very high. We'll average out their last 3 years of free cash flow because free cash flow can be lumpy year to year. And if we want a market-beating 15% rate of return, which is what Warren Buffett looks for and what we'll put in as our discount rate, a DCF valuation for AMD looks to be about $45 per share. That's well below their stock price, but maybe more in line given their lofty valuations. Keep some key points in mind. Compared to their past, AMD trades way out above any of their other multiples. AMD is a mega cap stock that currently trades at a 13 times price to sales ratio. Even in the last decade, their median over this time was just under 3, and you could have bought AMD for as low as a quarter of their sales going back 10 years ago. Their valuation chart looks stretched on most of these models. So why has AMD's stock price gone up by so much in the last decade? It's because they've had this huge multiple expansion that's really helped things along as the business has transformed. It's extremely unlikely for them to see this same multiple expansion into the future, which is why this may be pretty close to the peak for AMD. In fact, a Guru Focus estimate comes in at $114 per share, with a significantly overvalued warning. Now, before we put these estimates together, we need to think about AMD more like Warren Buffett would. He cares about a company's qualities to help him figure out a company's value. Let's hear what the experts have to say about both AMD's positive and negative qualities. We'll start with the long thesis first. Number 1, AMD has gained market share in the PC CPU market as Intel's manufacturing prowess has hit several road bumps in recent years. We saw that reflected in the stock price for both companies. Number 2, AMD's partnership with chip manufacturing leader Taiwan Semiconductor, plus its adoption of a chiplet manufacturing strategy, has allowed the company to come to market with more formidable products and greater flexibility to bring new products to market quickly. Number 3, AMD offers a massive opportunity to GPU makers, and while AMD lags industry leader NVIDIA, there's plenty of room in the AI market for GPU alternatives, such as AMD's products. But keep those negatives in mind with the short thesis as well. Number 1, despite AMD's recent share gains, Intel remains the industry leader in PC CPUs, and it might recapture the vast majority of the market if it can deliver industry-leading manufacturing capabilities once again. Still, that may be extremely difficult for Intel in their fight against TSMC. Number 2, AMD will need to improve its software capabilities to make a dent into NVIDIA's AI dominance, as NVIDIA is strong not only in GPUs but also in associated AI software tools. AMD is making acquisitions to compensate on this front, recently acquiring open-source AI software company Nod AI. Number 3, AMD's gaming semi-custom chip business is beholden to the design cycles and launches of new gaming consoles, and it may be a couple of more years until next-generation consoles arrive. Now let's put everything together for AMD. In our analysis of Advanced Micro Devices stock ticker AMD, we learned they beat the market and most of their competitors since January of 2019. They go 3 for 6 on our Select 6 analysis after making a huge all-stock acquisition of Xilinx that was completed in 2022. With their business qualities and our valuation estimates combined, AMD looks like a high flyer. They have a semiconductor edge in recent years that makes them strong, but maybe not that strong, and potentially not as durable in this cyclical industry that can swing over time. That's why a fair value estimate of AMD comes in at $66 per share. This number is a range, it's only about roughly right. Still, it's way down from their current all-time highs, and it's well below the street target price of $160. It just doesn't seem like their multiples are sustainable even with lofty growth assumptions. There's always the possibility to be proven wrong, but AMD's staying out of the portfolio unless it seriously comes back down to earth. If you would like to follow AMD and learn more about other attractive opportunities in the current market, make sure to watch the next videos and sign up for our Patreon to make a request, track every stock we cover on the channel to know when they're undervalued, and get exclusive bonus stock coverage. Thanks so much for watching, and I'll see you in the next video.